don't you just intro it a bit as I stall for some time?
Sure. So you're pulling up the landscape?
I am.
Yep.
I am.
Cool.
Yeah.
So, as you can, we have these conversations and we talk about what might be affecting the market, what could affect the market. And then we're always bringing back data where we can say this did affect the market. Now we have the stats to show it. So this was an article that has been brought up many times over the past 2 years and accelerated because of COVID. And that is work from home dynamics and how that's affected real estate. And this specific article talks about the impact, like the volume of how they believe it's affected real estate and the pricing in the real estate world with work from home dynamics that have shifted dramatically in a very short time because of COVID. But they were expected to happen already. They just became accelerated. So That's the first topic.
All right. Well, let's check it out. The landscape is our brokerage's email. If you'd like to sign up for it, please do so, avenue8.com. It's a great read. And they've actually, Darren, you said that you liked this. They've actually won already a Webby Award for best email this year, which is great to see.
It's really, it's condensed, it's on point, and the articles are really short, which is all fantastic.
Yeah. For Mr. Short Attention Span here, I'd like to see a little bit more visuals, but you're right. Yeah. They're very good articles. Okay, so the first one is under the big shift as a theme, remote work primary cause of home price increases. Turns out the real estate market has been under remote control. According to a new study by the National Bureau of Economic Research, remote work accounts for at least 50% of the record home price growth that occurred since the onset of the pandemic, as much as all other factors combined. Wow. That's highly significant for the present and future of the housing market because those other factors, low mortgage rates, stimulus checks, and lockdown orders, are no longer with us. But working from home is here to stay. In fact, it's likely to expand exponentially. In May 2020, about 1 in 50 Americans had moved because of remote work. Today, roughly 1 in 10 plan to do so. That should drive demand for upsized housing for years to come. Along the way, the study also debunks the idea that the run-up in the housing sector is a speculative bubble inflated by buyers taking advantage of cheap money. The demand was genuine, driven by a revolutionary shift in the economy that is only just getting started. So true.
That is a short article with as much data and like impactful as anything we've done recently in our podcast, and we're trying to cover any hot topic. That's huge.
Yeah.
Huge. Because what gets most of the attention is speculation, is low interest rates. As soon as inventory goes up, it'll all shift. Like this really late, 50% of the price increases based on people working from home.
Yeah.
One of the trends we see that I think is interesting as it relates to this, one of the ways people are able to, I think two things are happening, like even with small multi-units and then single family plus ADU, is that people are getting into bigger spaces with an auxiliary unit to help them compensate for the higher price, which is, it works, particularly if it's your first home, it's an easy transition. And or that's their workspace, a completely separate, detached workspace, which is ideal, I think, if you're working from home regularly, particularly if you have two people working from home, which is also not uncommon.
Yeah. And it's funny you mentioned that, Darren, because my wife yelled at me and said, "Oh, it's 2:00. You're going to start," and she had to go outside into the backyard.
Right.
Yeah.
So I think I see it a lot. The two people work from home scenarios. So having some division of space is huge. But driving a huge driver, 50% of the increase over the past couple of years.
And just as you're saying, this is a long-term value that is now within the housing market. It's not some temporary anything. This is
absolutely, and it is a generational shift. It's not just some temporary interest rate adjustment or low
Yeah.
inventory component. It's a permanent shift that is going to continue for a long period of time.
Cool. All right. Well, the next one is themed on the horizon. Seller buyers see a way out, a silver lining to the slowdown. In the past 2 years, furious buyer competition has deterred homeowners who were ready to move from entering the market. Who wants to leave their comfortable roost only to join a game of musical chairs in which there are dozens of desperate players fighting for each seat? But rising mortgage rates, along with inflation, have altered the contest in a way that favors those who are trading one house for another. Seller buyers borrow much less than first timers, meaning they're less affected by interest spikes. And most sellers will immediately plow all of their rapidly depreciating cash directly into an asset, their new home. That's still expected to appreciate robustly over the next 12 months. That, plus incremental improvements in the rate of bidding wars, days on market, and other symptoms of the frenetic buyer activity, may be enough to allow would-be seller buyers to come unstuck, assured that they'll find a new and perhaps better chair when the music stops.
Right. And those seller buyers have been afraid to make a move. The dialogue of, well, I'd be happy to sell my house, but where do I go? Is the common response from a seller buyer. We recently had a seller buyer start the process and kind of get very rapidly discouraged with the buy side and halted and didn't follow through with the sale. So that's nice to hear. And it's the same advantage. It basically, it's pointing out the advantage that people with more cash have, particularly in a rising interest rate environment, because they are getting a smaller loan. The price or the rates don't impact them as much. But one thing to keep in mind, which we're always very upfront about with a seller buyer, is more often than not always, but more often than not, the big hit they take is the adjustment on their taxes. And that can be a make or break for many people, even if they're taking all their cash, transitioning it to a purchase. Maybe they're buying in a slightly lower price neighborhood, getting a much bigger house, but that tax impact, they have to understand it. In this market, you can go from, maybe what averages $500 a month to $1,000 a month easily in a tax base. So that's an unavoidable component, unless you're over 55, then you can avoid it. So keep that in mind. You can transfer your tax base from your current home, and then the seller buyer dynamic is a little easier.
Well, look, guys, I put the link to this email in the comments, so check it out yourself. And like I said, if you'd like to sign up for this email, very good one, says a lot of things in a nice short manner. We love that. So check it out.